Good evening, good evening. Welcome to the live Facebook of Martin T. F. Wong. I do hope that you all had a good Hari Raya break. I am sure that many of our friends who are still in the Raya festive mood, I'm sure maybe tonight will tidy away, but you can always get and watch this again either on the live Facebook or on our YouTube channel, right, which is by the handler Trade VSA. So tonight we'll be talking about something that always been in my mind, that a lot of bad news that's coming up, and sometimes this sifu or influencer, or sometimes we call it stock market pundit, how much do we know about them, right? Because constantly we are fed with a lot of this information, news that feed through our news channel in here. I'm getting a fair share of those on my daily as I scroll through my mobile handphone in here. So I just want to share with you my thought on some of these and how true have they been. If you have been following some of my talk early on, or our member in here, I thank you for coming and I thank you for your support that we've been getting so far. It's been great, and let's get started, shall we? All right, and here we have the topic for tonight. Now tonight we'll be talking about staying alert and informed against the deceptive strategy of the what we call stock market doom and gloom pundit. Now these are the fact of people that you'll see a lot. They will be the first that tell you, yeah, the market's going to crash, the market's going to be sell every 50%. But let's examine the facts one by one and see if what they say it's really truth or not. I think that's the most important thing for being able to, differentiate between facts and differentiate between what we call opinion pieces, because we do see a lot of opinion pieces nowadays in the market. So this is why I want to do this talk and share more of what my thoughts on these people in here. So for tonight's agenda is a lot going to do with who are these generally the big stock market pundit that you will always come across, and why do they give this kind of prediction, all right? And then what are the evidence so far that the result is coming on? And of course we want to fact check some of these from one angle. We can always say that many times being from the position of unskilled, I assume many of you are unskilled and unknowledge about the stock market, you want to listen to some expert. And of course, during this media or the background of the stock market pundit, they will always say, successfully predicted so and so event in the past, right? And this could be 10 or 20 years ago, maybe just one. And yet, many of us take them as the sifu at the time. But why is also the stock market being ignoring them? So where are also the trading opportunity now, which we actually discussed last Wednesday? If you have not just catch the last Wednesday talk that we have, and this is pretty much going to the same agenda that we have, but giving more clarification, at least the need to be skillful, to be knowledge, and to navigate yourself out of this stock market that we have. So this is where we are. So for tonight's agenda in here, so why do bad news get all the attention? All right, what do you think? All right, for those of you who are listening, do let me know and give me a thumbs up. I know that you are listening. Why do bad news get all the attention? Of course, bad news always get more clickbait, right? This is how you attract to. Remember, which are the strongest emotion that we all have? Can you guess? Fear and greed. Which are the two strongest emotion? All right, I hope you got it right. The answer is fear. And because of this strong emotion of fear, that is why a lot of these stock market pundits want to give you the bad news. It's like selling hotcakes. There's money to be made in here. Now, I was talking to a fellow doctor last night when I was in a party, right? And then I asked that, why would a person like George Soros, or maybe another stock market pundit during his time, will tell you what he buys in the market or what he sells in the market? Why would he do that? What is the motive of it? Of course, if a person wanted to sell some stock, his motive is to ask you to buy, so he can sell it at higher prices. So that's why many of you, especially the beginners and those unskilled and so-called don't have the sufficient knowledge, it's always important which side of the story does this person who's influencing you, giving you the information in here. It's very important to see there is unbiased opinion that he has, right? Because most opinion, including some of mine that I'm saying, that is also biased. So that's why it's important we question. I know that even from every Wednesday I talk about you need to question, you need to see those facts, and you need to have this kind of what we call judgment in here, right? And also most investors think they are smarter than everybody else, even for those beginners too. I think I'm smarter, or maybe I'm not like the old school, I'm different in here. This time will be different because last time something happened, that did not happen to me. So a lot of investors tend to think that, but research has shown that we humans are hardwired to negative sounded news, because the more negative it sounds, it makes us look smarter too by following those advice that we have. And then finally, number 3 is the financial media guru and analysts. These are the people which I've shared with you before, right? You can see the one Robert Kiyosaki, Jeremy Graham, then we have Michael Burry, and then we have this guy Larry McDonald. These are what we call the fairly bear market. Of course, you also have the generally the good stock market, but they don't usually get very popular in sort of a bad market environment. Now remember, last week I was talking about the bearish mindset that we all have in and beginning of a bull market. It's very difficult to see and spot a beginning of a bull market. So watch some of those information that I've given to you in here. Perhaps that would give you some knowledge going forward in here, right? So take a look at it. Now, of course, 2 weeks ago, I was always been talking the biggest stock market pundit is no other than Robert Kiyosaki. He continued to give the end of the US dollar, the giveaway to the crypto. But we all know this guy is no other than a very, very good salesman, right? He was very famous with his Rich Dad and Poor Dad, and many of it, including myself, was taken by a lot of the ideas that he have. But remember, not everything that comes out is actually fairly truth about it. But let's look at the fact checking by ChatGPT, right? Courtesy of ChatGPT. So I went into ChatGPT and I wanted to see what are some of the prediction that came true. And you can see Robert Kiyosaki has always been the big supporter of gold and against US dollar. He did that in 2012. He said that gold prices will hit 3,000, and now in 2012, I don't think it ever hit. Even now only, finally, 2023, almost after 11 years, we only hit 2,000 US dollar. Maybe it fell a bit more in here. And then he talks about the US dollar collapse. But again, previously, I did another talk about the Bretton Woods framework that they went to unpack on, and they got off from the gold standard in here. And many of these people who used to have their US dollar pegged to the gold finally lost it in here, and they've been very, very unhappy lot. And I do think some of these people, the stock market pundit like Robert Kiyosaki, has been very sorry about it in here. And then 2019, he again predicts stock market crash, but it did not happen. So right now, every day when he comes out on the radio station, the things that he always promote are higher gold prices, US dollar collapse, stock market crashes, and Bitcoin's going to go higher, right? So these generally are right-wing kind of thinking, political driven in here. So keep in mind, right, what he have done, going back to 2012 is the same thing that he's doing right now too, all right? So stock Bitcoin hitting 75,000. Then we have another bear fella, right? Another very prominent value investor, fund manager who runs a big GMO fund management. His name goes by Jeremy Graham, and this is the same guy who always comes out on my news feed. And if you do follow the stock market, I'm sure you also see him too. If you do see names like Robert Kiyosaki or Jeremy Graham, give me a thumbs up so I know that you actually do heard of them, or type it in there and say, yes, I heard of this gentleman in here. So to know that the context that I'm presenting to you are clear cut to it, all right? So Jeremy Graham has been well known to be one of those super bear market. He's never been bullish. If you ever been bullish almost 20 years ago, and going forward, everything's expensive, everything is going to collapse in here. Again, he made a lot of headlines, and again, those negative news do get picked up, because like it or not, we as humans like to, fall into those very strong headline, very motive headline. Again, if you look at the ChatGPT, which is doing a fact check on Jeremy Graham going back to 2010, which is about 12 years ago. Again, same kind of thing. same kind of a message that he's going for. But pay attention, he always said that S&P 500 will suffer significant losses in the near term. That was started back in 2019, but in fact S&P continued to perform well in the year since ahead. Then they also have the bubble stock market to burst, and just 2 days ago he did say the same thing to Jeremy Graham, saying that S&P 500 is going to fall to 50% for where it is. It's going to fall down to 2,000 in here. So if you look out at the facts that I've shown you in here, fact checking in here, he has been right several times, no doubt about it, but he has been wrong many times. So far the stock market continues to perform well. So when you see some of these in here, you really need to fact check some of the so-called prediction that they make, because this kind of prediction, when you see it, you get scared off, and when you get scared off, you do not want to invest in the stock market. And perhaps that is why a lot of people don't see the beginning of the stock market, because they're overwhelmed by fear. And remember, fear is a big motivation in there, right? Now also let's look at the another comment that was made by Peter Lynch, one of the fund managers. Far more money has been lost by investors preparing for correction or trying to anticipate correction than has been lost in correction themselves. Isn't it really true? Because we always try to avoid this kind of correction. So what does that mean? That means we will sell early, right? Or we just completely stay off the market. When the stock market, many times you will notice stock market will start to push up much earlier than ever you need. Even that's why we use a green pentagon, which is provided by our trade VSA system in here. That at least that would have avoided some of the sell-off. Remember when the KLCI, we just turned red pentagon 2 and you had a green pentagon 2. And right now, if you follow my weekly Monday and Friday show, we are actually counting the number of days when the market can turn up or can turn down. Now, very important, when you go through all this, that a market that we are in the KLCI has been very volatile. So it's important that you do some own analysis. Where are the location? Where are the meat of those kind of returns that you have? And from then onwards, you can see when market turn green pentagon, you have some sort of return that will give you a positive portfolio to it. Because like it or not, if you do miss out many of this correction that we've seen here before, you miss out many of the big run. So just like what I had in January, I did not exit it in here because I know that the market's going to turn back in here, because from some of the price action that we see on VSA, and right now the portfolio has started to come back, and which I'm very happy with what I've done through in here. And I do hope that some of my sharing that I do tonight in here will be applicable to you too. Now, another stock market pundit which is very famous is the big short guy Michael Burry. In April 17, he was, he finally admitted he was wrong, to say the sell, but a lot of his close follower has been very asking him whether he's sincere or not. Now, if you look back to his record, again, fact checked by Michael Burry, again, he has been wrong many times too, right? He talked about in 2005, the market bubble, correct, but predict too early. Then he talked about inflation. Same kind of stuff in here, 2019. He talked about Bitcoin, speculative bubble, significant but did not collapse, okay? Not in 2019, it did collapse, but it collapsed in 2022, right? 21, 22. So 2 years ahead, right? That's not much of a prediction, right? Then pay attention. He said that in 2020, we were in a stock market bubble after the COVID, but it did not come true in here. Then 2020, COVID-19 will lead to prolonged recession in here. Yes, it does have a significant impact, but it since recovered, because he forgets that the Federal Reserve, this group of people where I talk about here, have a general interest in the stock market, because these politicians in the US Congress make money from the stock market. Now, if you've been following me, some of these thought ideas, you would have known that these are the ideas that you want to have. Follow the smart money. When you follow some of these smart money, like what we've seen about the market player, right? The Federal Reserve and also some of the politicians in here, you would have known you want to be in the market. That's why another way we do this is actually using the Pentagon Guider to look into our chart in here. So Michael Burry also get it wrong. Many of his predictions did not come true, right? So this is another quote I want to share with you, Bernard Baruch. He says that the main purpose of the stock market is to make fool of as many men as possible. Isn't it that quite true, isn't it, right? So when we follow this Sifu blindly, right? We never question, we never fact check. And that's why eventually we become a fool. So far, I do hope that what I've shared with you, at least the first 20 minutes in here, bring you insights to some of these predictions that generally many of them don't come true at all in here. Now, early on last week, we also talked about Wei Qi, where we see opportunity and you see danger. Now, given a choice of these two areas in here, to me, it's always to be an optimist, all right, rather than be a pessimist. Optimists always see opportunity. Now, on my left-hand side here, you'll see an optimist. You always see danger, and danger. Stock market will crash, okay, in 60 days. March 8th, right, so giving it in 62 months, so May it will crash. That's what his prediction now. Now, so far we haven't seen the market. It may correct, but it's not unlikely to crash. But again, we will fact check some of it in here. Then we have another opportunist. This is Tom Lee from Frontstead. He says 6 reasons is poised to go higher in 2023 in the next 2 months. So who is right? Now let's take a look at Tom Lee, Frontstead, why he said the next 2 months that the S&P 500 will gain at least 20% in the year. So what he's looking is looking into facts. He's looking into seasonality play, and that's the same thing what we do here in Trade VSA. We look at those numbers, we look at the seasonal. We don't base on our experience, right? We always base on facts and numbers. That's how we look into the market. And the same thing how Pentagon guided. We look at the historical seasonality, and from then onwards we make a call either to long or short using the green or the red Pentagon. And that's pretty much what into it. So if you look at the courtesy of ChatGPT on Tom Lee, he's much better off on stocks, right? He got a couple of prediction right in here. He said the S&P 500 will reach 3,450 by year end in 2020, but at that time it reached record high, but it didn't hit that target. But he was wrong on Bitcoin. So in that way, you could see Tom Lee was better on stock, but after all, he is a fund manager, right? But don't forget, in year 2020, year 2019, Bitcoin was the talk of all town. Someone need to make some Bitcoin prediction, right? So he did make one 2021. All we all know that, Bitcoin even struggled to break above 30,000. It's now, I think, about 27, 28,000 as we talk right now in 2023 April in here, right? Then let's look at the other very pessimistic person. He sees that everything is going to be collapsing, and again, many of his prediction again fall short of it. He said that 2001 decline in Canadian houses, but all the houses continued to go up. Downturn in US economy continued to grow, but did not experience significant downturn. And then he said that in year 2020, which was also the talk of what we have seen in the media right now, the de-dollarization, I think last Saturday also appeared on the Star Business. So many people who read trade is saying that the end of the US dollar. Again, on my live FB, I try to clarify to all my audience and my friends in here that this has been blown out. Again, we really have to fact check some of these stuff in here. Then he said that in 2021, a significant market correction in the first quarter of the year, but the stock market continued to climb up. So sometimes depending who you listen to. So that's why I always say before, those of you who are learning, who are loyal chart reader, right? Remember, read the chart. Chart don't lie. People do. And this is some of the, where we hold the people for what they say and then finally look at the outcome here, all right? So why do pundits like to showcase themselves so much? Now, we've always been saying this in here. Definitely, number one is the attention, right? We talk about the attention in here. Negative news sell better. And remember, many of these people in there are soliciting for your business. So you hear it a few more times, you hear it, got it right, then maybe you open an account for them, you'll get more business. I think that's similar in everything in the world before, right? The whole point is to gather, follower, and you also want to show your expertise. So when you show your expertise, like your prediction give you fame. Now remember, every time when you read some of this news, stock market pundit, they will always say about their success story that happened maybe 10 years ago or 20 years ago. And because of that one incident, right? The other one was Dr. Dr. Doom, Dr. Nori, which is an economist, and he predicted only one stock market crash, and he was been famous for the last 20 years. But many times again, similar to the table that I've shown you, he also got it wrong. And then the third one is to influence the market. You know, they want people to buy more. Remember, some of these may work with the smart money, right? We all know and seen during the 2021 during the rubber glove. Remember, right? Many people follow those influencer in the rubber glove, especially Kosan top glove, right? And we know many of them got caught, right? Because remember, some of these pundits always want to get you to buy when they are selling. Now, if you know how smart money operates, right, you are already winning half of the race. But unfortunately, a lot of unskilled and no knowledge people in here tend to fall into it, and then they become a victim, or they go against the smart money operator in here. And then finally, a little bit more, depending, once you become a customer of these people in here, or customer of this influencer where you actually pay them or you get a service, then they want to provide some sort of value services in here. But if you're not, they will just release one or two statements out there, and this will be an ego boosting for the influencer themselves in here. Of course, everybody wants to be that person, including myself. I want to have that ability to predict the stock market too, right? And from then onwards, so point is, now if you take in, this is a very nice chart, all right? You can, so it shows the gains from 2009 to 2020, a comparison to bonds. Let me just move out of the way here. You can see here, right? This here, this one, this here, bonds. Okay, this is bond return. Okay, bond return about 11%. Let me just get here. Yeah, bond percent. Let me just, bond is 11%, but stock market is 300%. Now, if you take in all the statement that he made, yeah, right, like 2009, 5th October, Dow Jones will fall to 6,000 trade by year end, right? For market forecast say take cover 2010, Dow will crash to 3,000, right? Very similar to some of the things that said by those market pundits. Euro debt will poise to rattle stock. Okay, November 2020, 87% risk of stock market crash by year end. So the same thing where we are right now. You can put those statements that we have, recession is coming, and see whether the market can go higher or not. Right, so that's why it's always important to see this market. Here comes the biggest stock market crash in a generation, 2016. Jim Rogers, another famous investor, migrated to Singapore. The worst crash in our lifetime is coming. Business Insider, 9th of June 2017. But markets still climb higher, right? And keep in mind, that's the most 300% gain in 14 years. Then why are the markets still heading for a crash in 2018? When you see this kind of headline, are you prepared for stock market crash? Don't you think you'll be intrigued? That's what we call clickbait. Want to get your attention in here. Some investors are making the biggest bet against the market in 9 years, right? There you go. And then Fed move in 2020 could end the stock market pandemic run. All right. In 2022, no doubt, Fed move, it finally came through. This was the only one that came through, but it still holds at this nice level. But remember, in 2022, I talk about some of the reason where the market fell more than it is was due to the Federal Reserve raising 75 basis points. Remember that point I talk about, right? 4 quarters, in 4 months. I think they rose 75 basis points. That was the fastest and steepest interest rate rise, and that's why we saw this market collapse into this part in here. And then since then, the inflation had tapered off, and the market is ready to move higher in here. Of course, right now, people are still listening to a lot of those influencers and say, hey, where are we likely to go? So from here onwards, you could see, right, ignoring market prediction is one of the better way to move forward in here. Now, like it or not, to be successful in this market, right, whether you're a short-term trader or long-term trader, it takes skills and knowledge, and most important is the control of the emotion. Now, this gentleman in here, anybody know who is this gentleman? He's a very famous author. Okay, he's a very famous author. His name is Mark Hansen. All right. Now, if you ever go to a bookshop, I do hope do. If not, you can check out the local community library, which I go to. I go to the one in Petaling Jaya. Those of you who are staying in Klang Valley, they have a lot of good books, and this is one of those books you should read. The Subtle Art of Not Giving a FUCK, and everything is F. And he has a very, very good lesson. If not, you can catch him Mark Manson. Check out his name, Mark Manson, on YouTube, and he comes up with a lot of very nice YouTube, very short one. Rather than buying the book, you can actually listen to him, Mark Manson. He says that Mark Manson Guide to Insane Success is really standing out there alone. First of all, you got to have a contrarian idea. Right, this is what we've been talking about, right? Last 2 weeks, you want to be a contrarian trader. You want to be buying when no one else is buying. You want to be selling when no one is selling. And that's right about it. And to stay out, to stay positive, stay ahead with all your friends and all your colleagues when you are it. And you have to be very, very strong conviction. That's why the control emotion is important. You also need to be correct about your idea. If you think that the stock market is going to go idea, which is my contrarian idea, I have my idea that the stock market is going to go higher. I'm going to be correct in it, and then you need to execute on it massively, which means you need to buy some of those stocks to hold it and to follow your system. Easy or hard? So this is really, to me, I found that it doesn't even apply on stock market. It applies everything in life. Don't you think so? So this idea that he talks about here, the guide to insane success, is all of us, if you ever want to be a successful, you need to have a contrarian idea. Right? And it's not easy to have a contrarian idea because a lot of us like to be in the same group. We want to be felt that we belong to a same community, same opinion. So when you are contrarian, you are like an outcast. But like it or not, to be successful in the stock market, the more contrarian you are, the more likelihood you'll be successful. Hope you get this point in here. And we'll talk more about Mark Manson. Now, one fine example, of course, we all know this gentleman, right? Mr. Warren Buffett. Now, since 1997, going back to far back, just maybe 24 years, right? He's been holding some of these stocks like Coca-Cola, Gillette, McDonald's, Walt Disney, Wells Fargo, and American Express that you see here. He's making money. So if you look from this chart going back to 1997, right? The purple color is the ETF of S&P 500. Yet, Berkshire Hathaway has beaten all the while the returns that was made by the S&P 500, with the exception of 2021 where the tech stocks came in, and since then Warren Buffett, being a banking and finance shares, he has sort of lagged behind. But if you look back from 1997, he has up to 2020, he has beaten the S&P ETF ETF return so far in here. And one of the reasons why is he was and is a contrarian trader, right? A contrarian investor in here, and he believes in those ideas that it is. So when the market falls, he go in and buy. When the market is high, he will always sell it. And that's how he is successful in here. For those of you who want to be successful, read more about Warren Buffett and the things that he do. You don't need to necessarily follow what he buys. Remember, right? Some of these he may get it wrong, but on the longer term, if you do most of the things he does and he recommended, you should be successful. But remember, this chart that you see here, it is almost a 20 years kind of period in time frame. That's how you want to make your kind of money that you have in here. So why do investors like you and me like stock market prediction? Okay, now of course we want to have a lot of potential profit, right? I know we want to sai lang, right? Like it or not, many people like to get a lot of money very, very fast. Unfortunately, you think of it, how many of us do get rich very, very fast? Unless you kena lottery, isn't it? But most of the time, we work in our day-to-day, these are incomes, we invest slowly, and we wait for the stock market to go up. And of course, not every year is up. Remember, year 2021 was a good year, year 2022 wasn't a good year. So over time, you see what we saw just now on Berkshire Hathaway, the stock goes up. But unfortunately, many unskilled people, especially those of you who just coming in here, you should not try to make money as fast as possible. Only a gambler will do that. The only way to make money in stock market is making slow money, bit by bit, right? When you're right, you write your profit. When you're wrong, you cut your loss. That's the only way to do so. And the other thing that people like stock market is also a risk management. Remember, right? Just now, Peter Lynch was talking about many people lost a lot of money because they want to avoid the correction, right? Now, these actually pay a very, very heavy penalty. Because when you miss some of these corrections, remember, the COVID-19 in 2020, right? That correction was steep, but within 4 or 5 months, the market corrected itself. And if you have missed out and didn't get back in, you would have lost a lot of money on that part right here. So remember, you may like a lot of this stock prediction and you think that you are very smart to get out early. Now think of it. It's just the same thing. How many of us will get to win lottery more than 3 times in a lifetime? Very, very limited, isn't it? Correct, right? And then the third one, of fear of missing out. Because we are always fear of missing out, we tend to hold on to a lot of our influencer in here. And that's really important, that we learn how to control emotion. And then number 4 is groupthink. Sometimes you feel that we must fit into a group, right? So we want to listen to what the expert, just like tonight, you want to be, feel that you belong to a stock market community. You want to hear what the experts say. But remember, I try to be a contrarian as much as possible, right? I always look at the market and do something different from the market. But overall, I do think that the stock market can go higher in here, but I would have to withstand some of the correction that I see day to day. All right. So very important, one of the things is that not to have opinion. We trade on what we see in our chart. Now, just now previously, right, we like a lot of prediction, right? Because that's something is going to be happening in maybe in 1 week from now, 3 months from now, 1 year from now. But we want to trade on what we see right now. So you can see from here is a S&P chart of a mini E futures. You can see this is something that I put on last week. You can see right now, what is it telling me? We have a red pentagon. Now we know that on the 23rd of January 2020, it crosses the 200 moving average. That was where the market started to turn up, right? So then we have the market test lower, right? This part in here, and then the market retest back the 2000. All right, sorry, retest above the 200 moving average in here, but we have upthrust. Now, upthrust are some of the signs that we have that shows their weakness in the background. We got 3 of them here, UT, and no surprises, we see a red pentagon in here. So right now, this market will continue to move sideways or downward, retest back the 01. We don't really know what it's going to be doing, but very likely it may test back the 40-day moving average right in here, or perhaps even the 200-day moving average. So if you need to go long, we still have to wait for the green pentagon for those of you who are trading in here. Now for our KLCI side in here, you can see right now we have the market below the 200-day moving average. It did cross above the 200 MA in January 2023, but since then has moved down. One of my take that why our KLCI has been a laggard performance is because many times our currency is also pegged to the Chinese yuan. So if the Chinese market don't do well, generally our market won't do well. So we are in the so-called a hard road between what we see in the US market and also the Chinese market in here. Now remember, our market KLCI is the 4th largest market capitalization, which means it only takes over the leftover. Whatever goes to Singapore first, go to Thailand first, go to Indonesia first, then only come to Malaysia. So whatever we have is always the trickle down effect in here. So that's why, like it or not, with the absence of the huge volume in here, we are left to a lot of the market volatility that we've seen in the Chinese market, the Shenzhen market in here. And that's why we see our market cannot go higher and has been moving sideways due to the lower GDP growth that we've seen in China. Now, we want to know more about where KLSE move, read more about China GDP growth, and you may not like what you see so far. They are predicting a lower growth after a mismanagement of the economy during the 3-year lockdown by President Xi. And the worst thing about it is that the same people who is running the country are turning very political, turning their attention to Taiwan and really enforcing a lot of the so-called Navy warfare that you've seen on Taiwan, and that's really driving the stock market lower that we've seen in here. I do think the political sense in here are looking for stability, prosperity, period, just like what we see in the US market, right? So the US market, like, the politicians are very, very greedy fellas. They're all in there for the money, and that's why we see that is how, we are able to gain this kind of prospect the good stock market that we've seen that grow, continue to go year in, year out. But of course, this is also driven by innovation and also driven by what we call stronger earnings year to year in here. So I do hope that from this talk you can see a differentiation how we look into the market by looking at the facts, looking at the charts, and then make a kind of judgment in here. So right now, you can see the KLSE high has turned red pentagon about 4 days ago in here. And as long as it doesn't cross the 200 moving average, KLSE remain to be bearish. Now, if you have any questions or any comment, feel free to ask me, because I always have a very, very quiet audience. I hope that you do understand some of the context I'm listening here, or some of them you're able to apply. I do hope that you're able to take some of the lessons that I'm sharing with you and then apply into your investment. Remember, everything you see in here are part and parcel of an experiment here. You need to learn them, and then from then onward give some sort of feedback to your emotion, then you're able to address it. If else, it's just like watching a movie, you don't try it out, you will never know. At least for start, you can download a copy of the SMARTRobie apps that we have in our Google and Apple Play Store and actually use it, all right? So the right approach in the stock market is actually handled by Mark Manson very, very well. This is what he says. I truly agreed with him. Now, in order to do well is to never be totally right. That really go against a lot of human, right? Even myself too. I'm sure that you always want to be right, wanted to be accepted in the group, wanted to be in the group thing, right? But being right means you have done learning. Means you don't want to learn anymore. You are closed off from ideas, right? But of course, many of you are here tonight because you want to get some ideas. So when you get those ideas, make sure you practice them, right? Then if you are open for ideas, then you are not satisfied for where you are, okay? So what you need to do is that you are satisfied with where you are, but not focusing on where you're going, all right? Never allow yourself to be totally right. I think that's the goal. So this is what we call imbalance. Just like I'm not sure whether the market's going to go down, the market's going to go up, but I do know if the market do something, I have a set of rules to go against, right? Or to go for it, to take opportunity of it. That's what we have been always preaching here with the green pentagon and the red pentagon. So that's how we actually look into the market in here, right? A very right approach to the stock market. So how do you protect yourself from this pundit? This is something that I've talked about last week already, right? Continuation. So to protect yourself, you need to do your own research. Just don't listen to me, even myself, what I say. You do a research in here. Hopefully it won't take you more than another 2 or 3 years by listening and listening. I do remember there's one chap, after listening and following me for 4 years, finally he only start to, go into the stock market. That's take a bit too long. We need to learn fast. Right, we need to get that feedback in here, because like it or not, right, we don't have much time on earth. The faster we learn, the faster we get into the where we want to go to, right? Don't take too long, right? When you take too long, another more attention grabbing will take you away, and then guess what? You miss that both of opportunity to build the wealth, to have the life that you always wanted to be. Second one is don't be overly emotion. Control your emotion. Time and time again we talk about managing risk is important. Because of market prediction, you heard of this seafood is so good and so good, right? Sometimes when he give you a stock tip, you bet your entire wealth into it. And guess what? If it didn't work out, you lose everything, right? So that's a very dangerous. Learn how to manage your risk and keep long-term view. Just like a Warren Buffett, I've shown you the last 20 years, right? He did make 300% over the last 15 years. And remember the longer S&P 500, right? That's the one that made about 300% in 14 years compared to bonds only making 11%. And then finally, the top one is listen. Always ask the influencer. Just like tonight, I always ask people, right? Give me some good questions for me to so I can answer you back. Now that's the whole thing. Generally, most Malaysians are very quiet. When the thing is over, they'll come and ask you. But you must always question this influencer. Where did they get their facts from? All right. And once you question it, then you're able to make your own judgment and you'll start thinking about it. So that's some of the wishes that I always have for my audience in here. Okay. So still focusing a lot on the US stock, as you can see here before. If you look here, very simple from the VSA 360, the average return for Apple stock over the last 7 years has been 27%. Now it's 24%. And one of the things that we see correction, if you see from here, after 3 months of going up, April, we always have correction, right? May, in 2021, 22, we have a 5% fall here. So you can see we have 1, 2, 3 months. That's almost 20%, right? And right now we're seeing a correction in the month of April, and it might continue all the way to May, right? Because we have 3 months, a good month, and then June, you'll pick back up again, all right? That's for Apple. Microsoft, very similar. Again, we have a very good uprise, almost 15% in here. Last year was a down year, but Microsoft have been making money every year. So I do see this year a down year, last year 2022, but Microsoft this year should produce a thing. So this is one of the important tools I tell many of my students and many of you who are our SMARTRobie users in here. Keep an eye on the VSA 360 in here for the monthly return of the Nasdaq. Very important to see how much loss and gain. You can see, right, some of the loss about 10%, but you do see some of the gains like 15% in here. Give you a sense how much kind of profit do you want in a month or so, right? Then we also look at the NVIDIA. NVIDIA has gone up by 33%, 18%, and 20% in January month. And of course, so much that you have gone up, guess what? People are starting to take profit that we see right now here. So about a 5% in. So keep in mind what Peter Lynch said, right? Far more money has been lost by investor preparing for correction or trying to anticipate correction than it has been lost in correction themselves. Meaning, by avoiding being in the market, you stand to lose more. One of the way is do your own research, learn about the system, learn about trade VSA in here, learn how the stock market works, right? Know some of the things that we talk about. Don't always listen to all of the influencers or the stock market pundit. If you do, question them and ask them questions too. That's my message to you in here. And of course, for those of you who start off, I think SMARTRobie is a good place where we have the S&P 500 where you can all begin with focusing on KLSE. So that's all I have for tonight. Keeping it pretty much within the 45 minutes in here. First, understand why many pundits are wrong. They will not be right. Just like so, by the time tomorrow another news comes out about bad news or another one that tell you about good news, right? Remember, many of them are wrong and more of them will be coming up in futures. Focus on the now. If something happen, you have to ask yourself, what are you going to do about it? All right. Of course, generally following most people, they will wait and wait and wait, right? So by the time they buy, it will be very high, right? Because you always want to have a group thing, means be aligned with the rest of people. Why would you want to be a contrarian? Remember, right? To be successful, you need to be a contrarian in here, right? Because it's less crowded. That's point number 4. It's not easy. So I do hope that by listening to this channel in here and following some of my thought and also share this good video with your friends, then more people. Remember, being a contrarian takes skill, knowledge, and important the control of your emotion. And do take time to learn how the stock market works and why VSA is the best, most suitable system, focusing on the now. So that's all I have for tonight. If you have some very good question for me, I do appreciate in here. You can follow some of my me on Facebook. You can also follow me on TikTok. Now I have a TikTok channel. The handler is trade_VSA, and you can see some of the things I've shared about and some of the food and some of the places I go to. And I do hope that if you are in the festive season now here, enjoy the remaining of the week and the holiday. I'll be away on Friday and on Monday, but I'll be back next Wednesday. So take note, I'll be away two live Facebook days, which is the Friday, the breakfast show. So this coming Friday, I'll be away for a short holiday, and then the coming Monday, right? And then next Wednesday, I'll be back. I will let you know where I'm going to, right, for my short holiday too. So with that, thank you for coming tonight. Again, if you have any question, go ahead. I'd like to answer them in here. Best Telegram, do join our Telegram chat room in here. And now there's a question in here. You bought Tengaga at high. Now, if you bought the Tengaga at high, now question the reason why you still want to keep it or not, right? Remember, some of these, if you buy it at high, right, then the question is does it still validate what you want to do? And most important is the question is, did you do a risk assessment to it? Now, if you bought it at high, that also means that many times your stock will take more years to return it. So are you happy to just keep holding on? That's one question in here, right? But the way I look at it, check out SMARTRobie.com. If it does pay a good dividend, I would actually hold it in here. But always question, why do you buy it at a high, right? It's because we are unskilled. If you're not unskilled, then learn to be a more skillful knowledge investor. That's my lesson to you. All right, Grace, thank you for coming tonight. So I'll see you. Be back next Wednesday. Have a good holiday. Enjoy yourself for the remaining of the week. And good night. Thank you for coming. And thank you for your time. I appreciate it.